Good evening everyone and welcome to Heiken Ashi and Ichimoku Heichi system practice. I've received some questions from you during these 2 weeks and I have prepared some answers regarding Heichi system, and also I will show you again, we will go through different entries so you can actually see how we deal with our Heiken Ashi Ichimoku or so-called Heichi system. If you're a fan of trading with Ichimoku, well, then you might consider this system. I already see that it has more than 1,800 views so far. So it's a nice number, and I know that a lot of traders simply enjoy trading Ichimoku. So here we will actually try to spot entries, exits. I will answer where to put stop loss, and of course the inevitable question is always how much money I should put in a trade. I mean, we all know that I really prefer to use low risk trades simply because if you want to stay longer in this business, especially guys if you have big accounts, then I advise you to use low risk. Of course, if you have smaller accounts, then sometimes you need to take that risk. But ultimately, it's always good to use simple and yet profitable rules for money management and proper leverage. That proper leverage is your holy grail of trading, definitely. So, Heiken Ashi with Ichimoku or Heichi system practice. This is how we deal with the system. I will go through quick explanation of the system for all of you who are new, and then I will go through entries. So I will not go in detail about the indicators because I already covered it in the previous webinar, but rather I will focus on entries and historical examples and how you could trade it, because system is traded on 15-minute time frame. Before I begin, standard risk disclaimer, explaining that online education materials are available by Admiral Markets Estonia for a global audience, and Admiral Markets UK takes no responsibility for information accuracy. This is solely my opinion and in no way it represents the actual suggestion for a trade. These are not MUK's opinions and this is not advice, it's a personal opinion only, and this webinar is for informational and educational purposes only. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Okay? And so I will just cover these important things about the system itself, Heiken Ashi, EPS, how we actually make entries, and then I will switch on to live charts so you will see historical trade entries. And of course, guys, if you have any question in mind, please do not hesitate to ask me. So, Heiken Ashi candles are used in this system. We don't use traditional Japanese candlesticks. This is not a price action method. This is indicator-based system. And it has some of the concepts from price action, and that is a triple EMA. You know, guys, that I'm a big fan of, in price action trading school, we also learned about SMAs and EMAs. So the combination for Heiken Ashi is always good to use 30, 60, 100. With price action, you can use actually SMAs. So it depends. I can say, investigation, and research into MAs generally suggested that EMAs are better to use with Heiken Ashi. And in price action, of course, except for EMA 89, I am a bigger fan of SMAs. Okay? You know that I also have been explaining about SMAs 30, 60, 100 or 30, 50, 100. It's very good in price action, but because Heiken Ashi uses different calculation for the average of the price and candlesticks, well then, in my opinion, EMAs are better to be used with Heiken Ashi. Okay, so this is the strategy that actually uses EMA. So EMA 30-60-100, Heiken Ashi candles and stochastics. 1433 set at stochastic simple low high. And you should have daily pivot point indicator. I advise you to use Admiral Markets pivot point. It's very good. It's actually daily pivot indicator, and you can find it on your platform. Of course, if you're actually traders of Admiral Markets, you will find the indicator integrated in the platform. I don't need to explain this. This is what I explained. And yeah, I received a question on my email. A trader was asking, can we actually use all of these lines with the system? And the answer, guys, no. Okay? I was very specific and I was very clear with the rules of this system. There is no straying away from the rules, and there is no modification of the rules. If you want to try to see how it goes with trading it on higher time frames, well, I don't see that there could be a problem. You can try to do that, but I really advise you to actually try to trade it on these settings, default settings that I sent to you, and that you can actually see lower time frames. Because guys, the main principle here is these exponential moving averages, guys. That is very, very important, okay? The problem here is that a lot of traders simply negate those moving averages. In the original video, guys, I didn't actually show these moving averages because those were the part of 30-60-100. But now I say you can add it to your chart. So we can place a slight modification of this. And if you were watching the original webinar where I said, okay, we use just these lines, okay, without Tenkan Sen, Chikuspen, just Kumo lines. It is the same. We didn't change anything. The only change is adding these lines that were originally found in MTF TPS strategy, 30-60-100. Okay, we don't use any stochastics, we use CCI. So don't be confused with this. The only concept that we borrowed from MTF TPS strategies, 30-60-100. So your chart should look like this. So guys, I'm telling you this because some traders were confused between these two systems, MTF TPS and this Heichi. Heichi template looks like this. We only have Kumo and we only have this blue line. This is momentum line. We don't use stochastic. Now we can add, and I will do this, guys. We can add moving averages to further give you the sense of a trend. Why? Because 15-minute time frame is used for entries, and these lines will give you further momentum and further trend that is spotted on higher time frame. So if we put, we don't need to use same colors, but let's say exponential, we will use 30. We will also use 50. Exponential, no, let's use 60 as per rules, so we won't be modifying that. We can use blue, okay? We can use blue. And here, yeah, looks like similar, so I will actually change this color because of this blue line. It doesn't look that good, so I mean you can use whatever you wish, but just for this webinar. Yeah, this is okay. So purple is and red will be final color. I like combination of blue and red on the chart. So here it's 100 exponential, set at close, right? So okay guys, this will give you another filter for Heichi system, you see? And it's good. If you don't want to look at these lines, I mean, it can be a little bit too strong for your eyes. You can actually do it like this. You can switch here, replace here. Actually, this is much stressful for the eyes, and you will get the filter on the chart that is not stressful to your eyes. Yeah, okay, it looks much better. So this is additional filter that will give you higher time frame trend, that you don't need to actually, you don't need to think twice about this, okay? So this should be enough to explain and give you the clearer, more clear picture of higher time frame trend. So whenever you see that red is above purple and above, that green is above purple and above red, as in this example, you might assume that the trend is actually bullish on higher time frame trends. Okay, it's also good to place it like this. Okay, so you see blue here, this is your entry trend line, this is your trend line. So we are borrowing this concept from our MTF TPS, and we don't use stochastic, guys. We use purely CCI. So here, let's use let's say $CAD, for example. At this point, you always need to wait for the first swing. That is what I told you, and I'm always telling you when you see a trend change. So here we had a short trade, and here, guys, you see these lines, moving averages, are flat. So those indicate non-trading area. Okay, you see how those are flat. There is no clear trend, guys. For clear trend, you need to see moving averages pointing in a direction. As in this example, they're pointing to the north. See here, this is flat, so this is additional filter. You see, you would have made probably bad trades here. I mean, okay, this trade would have give you maybe 15 pips. But still, guys, if you watch moving averages line, you would be staying out because it's flat. Now, this is the first swing, right? And here, this is your entry, here. You see? This is your entry here. Now, when you know that fundamental reasoning behind the pair is strong, as in this example, $CAD was indeed bullish, you can ride a moving average line. So you can actually, if your entry was here, you would probably close your trade here. But sometimes during very strong trends, you can leave your trade running because you see, moving averages are actually giving you the cue that trend is indeed strong. Now here, when this green moving average crossed below the blue here, well, this is the time to take profits because trend will probably change. Now the additional cue, and I mean, you need to trade this on demo first, and you need to, guys, trade it when you see a pair where trend is strong. So when you see the trend is strong, do trade it. Here you could have made additional entries, adding to your winning trade. See here, additional entry. Here, additional entry. Here, okay, here we could make an entry, but actually, see this filter of moving averages told us to stay away. But it would have been a good entry if we didn't watch moving averages. So you could actually place moving averages on the pair that has a strong trend. If you still prefer, guys, to trade without, you can trade without moving averages. Simply said, If you want to ride the trend, then it's easier with moving averages. If you don't want to ride any trend, but you rather want to take 20, 30 pips out of the pair, out of the trade, then guys, you don't use moving averages. Simple as that. So let's see if you would trade without moving averages. We will just hide this to actually be shown on other time frames, so I don't need to edit manually later. Okay, so they are not visible now on 15-minute time frame. See, so if you decide to trade without moving averages, as the original rules implied, then you definitely need to watch for pivot points, guys, and not carry over your trades during the night. This is mostly intraday system. And because of that, we trade it as intraday. So the only exception is riding those moving averages. That is when you spot a strong trend, because there are fundamental reasons for that, and you want to actually carry over your trades during maybe the weekend or the night. But primary purpose is to profit fast. So that is why the original rule said trade it with daily pivot indicators. This is Admiral Market Pivot, and if you go here, it should be set on daily like this. So these are daily pivots. And you see, guys, for example, we had a couple of trending moves here where you could make profit. Dollar CAD intraday was retracing. So here, actually here, this was one entry, good entry. Here we also had an entry. You see? Then we actually didn't have a retrace. Here the price spiked up, then it dropped down. So how you make actually entries? I covered that in a previous video. So cloud should be red. Heiken Ashi candle should cross above, then below blue line, and CCI should sit or be lower than -100. Guys, there are a lot of historical examples. We know that trend on euro dollar is very strong to the downside. And I told you to sell euro dollar, remember. I also did the analysis on euro dollar with Camarilla MACD. But here you see, I mean, price action is, I was actually shorting euro dollar every time it was rallied to the upside. And you know that I am short on euro dollar, but with indicator-based systems, you can trade both ways. So here, you could have traded this to the upside, and you would have made 50 pips. And you see now, we had actually short trading opportunities here. And even here. Now, it's crucial thing to follow this daily pivot points if you are not trading with moving averages. If you want to add moving averages here, let's see what will happen now. Okay, here. You will see that actually you could have ridden the trend. Watch this. For so long until this point here. And then if you made another entry, short entry, somewhere around, let's say here, I mean, you see, it's your choice. So because some traders ask me, can I trade Heiken Ashi on higher time frames? And I said, yeah, maybe, but I need to see how, because it was tested on 15-minute time frame. The only thing how I could oversee the problem or with a multiple time frame perspective is adding higher time frame moving averages, 30, 60, 100. It's borrowed from FTPS system that I also created. So my advice is, if you want to stick to intraday trading, then do not add these moving averages, because those can filter good trade setups. If you want to trade it with carryover trades, where you actually want to trade it a little bit longer and stay in trend for a little bit longer, then you can add moving averages. But my advice is, you need at least practice with Heichi in order to trade without these lines. And another question, do not add any stochastics here, because it's not for this system. I always receive emails asking me should I add a stochastic indicator, should I add this or that. I always say, guys, no, stick to the original rules. And as I say again, the only exception is these moving averages that will give you a longer ride within the trend. Watch this, for example, guys. I mean, if you can enter here, let's see, this is based on moving averages, let's say, entry. Okay, here, this would have been a good entry here. Watch this. You could have made so many pips, right? But sometimes these moving averages, as I say, can filter out good trading opportunities. So that is why you should actually, you see, there will be opportunities where those moving averages wouldn't work. For example, here, if you traded this, at least as a scalp swing trade, 50 pips, guys. But if you use moving averages, you wouldn't get any pip on that. When you use a system, or you want to use a system, you need to follow the rules. It's not like price action trading, guys. As I was saying, price action trading is one thing, indicator based trading is another thing. With price action trading, you need to be much more patient if you want to exploit an entry. With indicator based system, you need to follow the rules. So it's different. Now, the drawback of indicator based systems is the more filters you use, less trade entries you would have, but it can also impact your risk to reward and your winning ratio. Why? Because, as I said, you shouldn't trade with moving averages if there is strong trend, if there isn't a strong trend, because you would filter out many trades. But if you see that there is because of some fundamental news, guys, don't forget this system is traded on 15-minute time frame. So it means that if there is some really strong impact news, big impact news, you can actually use the system to place one trade, add more trades, and sometimes if you catch a trend, you can make your monthly profits in a single trade. And what then? Then you should stop trading. It's simple as that. When you reach your goal, stop trading. So it's very, very important to understand these concepts. Borrowed from MTFTPS is 3 moving average lines, 30, 60, 100, and they should be used only when you spot a strong trend. Otherwise, don't use it. So that is my answer to multiple questions. Should we trade the system on higher time frames or not? So I added this another rule to filter out those questions and to tell you you can do that, but only if you see a strong trend. That's because 15-minute time frame is lower time frame. It's mostly used for intraday trades, and it's also good for scalp swing trades. Let's see dollar yen, guys. What did I tell you about dollar yen? You remember? I told you that you should go long. And I hope that you really are making money, guys. I made several videos on trading pound yen. And actually, I mean, guys, yen pairs are mostly correlated. And I said, guys, dollar yen is really the best possible trade to go long. And I told you that 110 actually would give you short trades. Well, it still can give us short trades, although the price hit, you see resistance here. So if you followed my advice, on price action, trading school and session recap and my analysis, I was very specific and very loud in saying that you should short 110. You know that and you remember that. And watch this. Now, because the price didn't hit exactly 110, it actually made quadruple top, triple or quadruple top at 15-minute time frame. So watch this. You could have shorted this. But as I say, that is price action. This system is actually showing you how many good long trading opportunities you could have made. Watch this, guys. I mean, so many good trading opportunities. One, I mean, I won't count it, but I will show you some. Watch this. Long trading opportunity. It's always best that you see a bit of retrace before you make an entry. So, well, sometimes in strong trends, you don't need so big retrace, but let's see. This is, okay, no entry here, no entry here, no entry here, here. Another entry. Always also watch that this line is above cloud. So those are always best entries. Here, another entry. Okay, no, this is not entry, sorry. This one is actually red Kumo. Here, this is your entry. Here or here. Retrace. You see, when there is strong trend, the price won't even retrace to cloud. Here also. So many good entries. So, I mean, it would be very clear that if we use 30-60-100 EMA on this chart, you would see only one entry and add in entries because this is a long. Let's see if actually moving averages are telling us. Okay, and what do they tell us? What are they telling us now? They are telling us that the trend is strongly to the upside from this time, from this entry, actually where we made our entry, from this candle here. Now you would probably close your trade here, but another trade opportunity here. And you see, now if you were long, let's say you would have probably closed your trade here. But you see, I was telling you to go short with price action. Camarilla make these setups on session recaps. And I also tell you to go long. We had two setups, both long and short. But I was really watching for that short trading opportunity because it was really overbought. But now you can see that actually you could have made a lot of entries just using these EMAs. See, even here, guys, watch this. Here, your entry. See how the price is. I mean, sometimes you will see a flat price action, But when there is another momentum push, you will usually see it in trend direction. Any questions, guys, so far? If you want anything to ask, just go ahead and ask me. I mean, I guess that everything is clear regarding the rules for adding 30-60-100 and not adding it. I was very, very clear and very specific about the rules when to add 30-60-100 at your discretion. We can also watch. Some trader asked me for New Zealand dollar. Well, I will remove these lines because there is no point in showing, because New Zealand dollar simply does not have a strong trend. Yen pairs have a strong trend, not dollar pairs, except for euro dollar. See? Where would you place your entry? Okay, let's say that your first entry could be made here. And then we actually went short. Here. There. And now here you will see this would have been not so good entry. I mean, we don't have an entry here because price didn't close below. You see, this is good example. This candle here didn't, it actually, you see, it closed above blue line. So this was not an entry here. It needs to close, to touch the line and close below the line for short entries. So this is no entry actually here. And then we switched again to long entries. Here, your long entry. You see, I mean, I know that, as I said at the beginning of the webinar, traders prefer Heiken Ashi. You just need to be patient, guys. Because don't rush in trade. For example, you see that the price is going up and you want to short it immediately. No. Just wait and be patient. Don't rush. It's always best to wait for a retrace than enter the market. I personally love those entries that are made in after some retracement, when it hits the line. For example, you see, this is why we use filters. CCI didn't hit 100. It's very important rule. It should sit or be above 100 for long trades. And I really mean it seriously. If you want to follow a system, then the rules need to be respected religiously. Because it's a system, it's not price action where discretionary trading is the advantage or disadvantage if you don't know how to read the price. So yeah, here you see CCI was not sitting at 100 and it didn't go above 100. So this was not an entry. This is a good filter to use, guys. Good filter. You see, there is no short entry because Heiken Ashi candle didn't close below and we didn't have CCI touching minus 100 for short trade opportunity. Also, traders ask me, what if we see ranging market conditions? Should we trade? Well, guys, you don't know if market will start to range until it actually ranges. So, what would I say here? Here, if you would made an entry, you would have made an entry, maximum 15 pips. But if you didn't close your trade here, and you saw that price is going nowhere, it's best to close it in a small loss because you will make up for the loss and wait for trending opportunity. You see, this is everything is range here. So when you see that the price is ranging, you might lower your target, guys. Take 10, 15 pips if you see that market is ranging. There is an old saying that goes, no one went broke when taking profits. You cannot go broke if you take profits. So when you see that market is going nowhere and that it actually ranges and you are in the trade and you don't know what to do, simply guys, either accept a small loss or take 10 pip profit and move to another market. Always find and trade markets that are trending, because trend is made by big fish and you actually are smaller fish who follow big fish, the shark. Now this, when you see this breakout, sudden breakout above this range, you know that market is going up and you might want to actually profit from some long trading opportunities. But let's say you want to see a touch of the price. You actually want to see that rules are respected. That is why we use different filters here. By no means this was an entry here, guys. This is not an entry here. I saw a picture of a trader who sent me the snapshot, something similar to this. And he said, why Nenad I lost the trade? I mean, that is the most newbie question. But I don't mind. I mean, how can I say to anyone, why did he lose a trade? But in this example, my answer was very, very clear. This is not price action. This is indicator-based system, right? So for me, it's much easier to give you a proper answer. Why you lost your trade? Because you were not following the system at that time. You were modifying the system. Here, guys, do we have the rules for a long entry? Price is going up. Cloud is blue. Everything is great. Price is touching blue line, right? But do we have an entry here? I would say no. Why? Because we have another filter, guys. At this time, we have CCI filter here. And here, there wasn't an entry. Now, in this example, guys, if this is, and I mean that this was actually resistance area, resistance 2, you don't place your trades at resistance, guys. That is why you need to use these pivot points. If price was hitting resistance 1, 2, or 3, you need to think twice. Okay, when it hits R1, if it retraces, it's still okay. But if it hits R2 or R3, you don't make long trades, guys. And here in this example, if this was ranging market, I assume that this was indeed resistance 2 or resistance 3. I cannot go back in history with pivot points, but I assume this was resistance 2 or resistance 3. You cannot make those entries here, guys. Here, you cannot make these entries here if this is resistance, guys. You cannot make short entries as support. The primary rule of trading is buy low, sell higher. Even if you trade indicator-based systems, you need to imply the rule. You don't go long when price is giving you and hitting R2 or R3, because it will be a loss, guys. No matter if your system is signaling long trade, you stay away from the trade. No point in going long at resistance. It's better to drop towards R1 pivot point or support while still following the rules, because that means you will be buying lower or selling higher. So traders would ask you, would I go short now on New Zealand dollar? Yes, guys. If this candle or subsequent candles go below this line and this cloud is red and we see CCI sitting at 100, yes, because the price is at support. I mean, this, if it breaks this support, will become resistance, and there is still enough room to support 2 and 3. But if it breaks down, I would never go for a lower entry here, no matter if my system tells me to do so, because that would be emotional trading. So that means that I would be so eager to make pips and I would probably lose the trade. So you don't trade like that, guys. Okay, that is very important to stress out. That is why I made this additional webinar, to show you additional rules that you can apply for longer trading, longer, I mean literally to stay longer in the trend if there is a strong trend, to know where to go long, to know where to go short, and stress out how it's important not to go long on resistance and not to go long and not to go short at support. R1 and S1 are okay. For example, guys, if price went down, as I said, it would mean that S1 here below this would be resistance. So in order for S1 to turn into resistance, price needs to go below S1 and blue line and stay below until CCI signals minus 100. That means that there is momentum and trade should go towards S2 or S3. But if it hits S2 and gives you another signal to go short, stay away. That is why pivot points are important. If you remember webinar where I was saying and teaching you how to make your own system, I was very specific, saying you need to have pivot point indicator, one leading, one lagging indicator. This is lagging indicator, this is leading indicator, and you have pivot points. You don't need more than that. You can apply moving averages just if you want to go with longer trends, to stay longer in your trade. But you don't use any more filters. No stochastic, guys. No stochastics. And one more example, we will do that on pound New Zealand. I said, guys, only trade pairs that you know, and those are major pairs, dollar and yen pairs. Also, I had a question from a trader who traded pound New Zealand. I said I wouldn't trade pound New Zealand with the system because it was not designed for such, it was not designed for beast mode trading. Pound New Zealand is the beast, guys. Very dangerous if you don't know what to do. Those swings on this system can be very strong. Even with price action, Camarilla MACD, sometimes I take pound New Zealand trade, but very rare. I'm more focused on yen and dollar pairs. With this system, don't trade it. Stick to dollar and yen pairs. Sometimes you will get huge entries, guys. But my advice is, if you know that pound is in downtrend, for example, only take short trades. Here, for example, this trade here would have given you huge amount of pips, guys. Watch this, because pound New Zealand is the beast. It gives you a lot of pips if you are in the right side of the market. Ilya is saying, I thought pound Japanese yen was the beast. Pound yen is the dragon, Ilya. The beast is pound New Zealand and pound yen is the dragon. It is connected to Japanese and Chinese, I mean more Japanese mythology with dragons, and yen is the core of the pair. Pound yen moves much heavier than pound dollar. Ilya is saying this reminds me to Pokemon. Yeah, there are some similarities between Pokemon and those nicknames. But watch this, guys. You really, I mean, when there is strong trend, you could trade pound New Zealand. Watch this. I mean, for that, pound is the key. For pound yen, yen is the key. For pound dollar, pound is the key. Remember this. See here. But again, when you see that there is no strong trend, this is strong trend. This is great, guys. Watch this. When you know that there is strong trend, watch this. You would have made tons of pips, 600 pips. Watch this. But when there is no trend, guys, you could lose. Okay, this is long entry here, right? I mean, you wouldn't lose, it's 100 pips. But I need to go back to see actually and to show you where this pair has a big range. Now it doesn't have such a big range because pound is trending. Pound is trending. So it moves. But when you see no trend, you will actually have not so good entries. For example, here you would probably lose this trade, but okay, here actually. But no, it's 100 pips. I mean, now when I look back at the history, this looks very optimistic. But I still didn't trade it. I mean, for very obvious reasons. I got burned a couple of times with pound New Zealand, and that is why I'm staying away. Really, I got burned with pound New Zealand because my stop loss was not big enough, and this pair can make huge number of pips in a swing, so that is I'm staying away. But let's say, judging from price action lately, you could have made really good money if you actually went with system rules, and I literally mean it. Still, when you see and when you know that pound is not trending, stay away from the system. Stay away, okay? Not from the system, sorry guys, from trading pound New Zealand. Yeah, I still need to see where it made, and I remember that it made not so good swings when there is range. Here, for example, not so good short and not so good long actually here. So you see, if you went here, you would have lost your trade. Every other entry when system is trending should have at least given you 50 pips. I mean, that's great. But still, be careful when pound New Zealand is actually, when pound actually is ranging. You need to be very careful. David is asking, do you consider future cloud color change? David, no. I would say, for example, this is cloud change here. Let's say, just for example, right? Now, you see, the price is lower, but when it makes a swing higher above this line, cloud will still shift to blue, right? So that is very important. It will shift to blue. So I'm watching now moment, always now moment. For me, that is very important. Cloud is indeed shifted into the future, but it's just a shift to indicate a possible trend change. Because originally Ichimoku traders want to see in the future to see whether the price will change. So for example, if they see this, they would exit their long trades. This is the sign to exit the trade because trend might be changing. Color change of the cloud that is shifting into the future indicates possible trend change. So no, I only watch now moment cloud. That is the question. Good question. Thank you. Let's use just an example, guys. Swiss yen. Let me see something with Swiss yen. Obviously, yen is trending, so we don't have anything to say for that. Yeah, so most pairs, due to volatility after US elections, have a trend. But my point is, don't trade ranging markets. But if you're trapped in a trade and you don't know what to do, believe me guys, take 10, 15 pips and switch to another market. Do not buy, sell, simply revenging your trades, because that means you're not following the system. You're not following the rules. And there was a question, will any dollar correction happen this week? We will see, guys. Maybe it will happen on Friday. But at this point, I don't see any dollar correction at this point. It's still going strong, and it's still based on post-US election. Dollar yen could indeed reverse from 110 again if it hits the zone. It reversed from 109.75, so 110 is still a good short in my opinion if it gets there. Euro dollar is going where I told you to go, that it will go, so actually it's following the trend. Reddy is saying Heiken Ashi with Ichimoku can use mainly for yen pairs, but today you showed which other pairs we might trade. Yes, guys, because it's easier to trade now because you have volatility, right? And it's still post-Trump euphoria. Dollar is really going strong, but when it settles down, we will again see range. So you need to be very careful, guys. Lower your targets on ranging markets. Sean is saying next week is Thanksgiving. Yes, indeed. In the US, so the markets are going to be slow. Yes, Sean. Next week, markets will be slower because of Thanksgiving in the US. Indeed. So you need to actually, if you trade during Thanksgiving, and I presume you would trade US session, switch to low volatility trading, or if you're trading Heichi system, lower your targets. Lower your targets. Don't go with full price projection. So instead of taking full profit with R1 or S1, make it the half or make 10, 15 pips and you would be fine. Indeed, I assume that markets are going to be slow simply because of Thanksgiving, yeah. Okay, guys. I think that we covered most of your questions, most of what you wanted to know. Again, I will repeat it finally, and I will not be repeating it again. Use EMAs only if you want to stay longer in a trade when you see that that particular pair or currency has a strong trend. Don't use it for intraday trading. Sean is saying, thank you, awesome job once again. Thank you. I mean, guys, as I say, I really enjoy helping you, and I want to help you to make something out of financial markets. And for US traders, guys, if you live in US, my biggest hope with Trump is that Trump gives you the opportunity to trade outside of US. That would really be very, very beneficial to traders who live in US. I would really like that to happen. I don't know if it will happen, but that can be a change, really a huge change for US traders. I know, guys, that you have a lot of rules, a lot of regulations, and you need to abide with those first in, first out rule. Then I mean, it's not that good. Then 1 to 50 leverage. Well, it can be good because it actually it will keep your money in your pocket, because I know that many traders simply use big leverage, and that's how they lose money. But still, maybe Trump will give you more freedom to trade with European brokers. I hope so. Okay, guys, thank you for listening. I would appreciate any opinion on Heichi, any question. I will answer you. I wish you a great trading day, and tomorrow expect new analysis, and talk to you soon, guys. Cheers. Trade safe.